Welcome to the Real Estate Investment Hub, where you can learn how to grow, scale, and optimize your real estate portfolio through our conversations with investors and thought leaders in the real estate industry. Let's move on to the episode.
All right, everybody, welcome back to the Real Estate Investment Hub. So today we are talking about potential opportunities within the Vancouver market in 2024. A lot of analysts believe that central banks around the world will be decreasing rates between 2 to 4 times next year, probably 1 to 1.5%. I like to be a little more conservative usually, but we do believe, and a lot of people do believe as well, that quarter 1 and quarter 2 of 2024 will be really when you'll see a lot of opportunities within the market, and probably the last time you'll see these opportunities, because while we don't think the market would go as crazy as it did during COVID, buyer and seller sentiment will probably change a fair amount.
For sure.
And because of that, you probably won't be able to capitalize on deals as much. So within the next few months is definitely a really good time if you are actually thinking of investing within the market. Now, Rodby, do you want to start us off with maybe a couple points of and a couple of different types of inventory you think would be good in our market?
Yeah, for sure. So to your point, I do agree that this year and maybe a little bit of the next would be a great time to invest for the reasons that you did mention. There are a few different sectors that are feasible for investing in real estate that we have identified. But of course, these are just our thoughts, and these are all based on what we've seen in the past, and we're basically extrapolating that towards what we think may happen in the future. Whether or not it does, who knows, but this is our best guess of how we think the market will change. So one sector that we think is quite feasible to invest in 2024 is the pre-sales sector of real estate. And for those of you that don't know, a pre-sale or pre-construction property is basically when you purchase a property before it's even constructed. We did an episode on this a while back, but I'll go over it briefly. For this kind of investment, it's quite attractive for young professionals, people just getting into the market. And the reason why is because the timing of when you have to pay the deposit is spread out. Depending on the project, of course, every project is different. Every developer is different. Usually it's about 15 to 20% deposit throughout a span of a year and a half, sometimes even 2 years, but typically closer to 1 or a year and a half. And why that's favorable for people just getting into the market is because the cash going out is a lot more manageable, right? So you can imagine for people that don't have the deposit all at once right now, this is more manageable than if you are to purchase a resale where you'll need that entire deposit a lot quicker.
Definitely a lot more stressful.
Exactly. So at least here you have a bit more flexibility. You can plan things out a bit better too, which we're a big proponent of, right? Making sure that you have a great investment thesis, a great strategy coming into it, so that after you do complete, even after that, moving on to your next property, you kind of have those next few steps planned out already. And if you don't have an investment thesis, where things can go wrong, I'll go over it later on, but it's always best just to have a plan with anything, right?
Definitely.
But for 2024 specifically, the thing is, with interest rates seemingly going down sometime in the year, we don't know exactly when, there's fewer and fewer investment opportunities in the pre-sale sector, because as a developer, thinking in their shoes, why would they cut you a deal or provide you with incentives if they know the market will pick up due to the interest rates coming down, right? Most of the time, when they do sell these developments, these projects, they only need to reach that threshold to get construction financing, whether it's 60, 65%. After that, they can really just hold on to it until they can maximize their profits.
Exactly.
But where we see specifically in the pre-sale sector where there is a great opportunity to invest in is still the master plan communities. again, we mentioned this in the previous podcast episode, but for those of you that don't know, master plan communities are essentially a longer and bigger plan for a development. So it could be multiple towers throughout a span of 10, even longer years, right? And the reason why these are great is because usually for master plan communities, they're investing into infrastructure as well, right? So you usually have commercial units at the bottom, and then they'll add recreational places too in the area, whether it be recreational center, community center, commercial, again, parks, whatever it may be, schools even. That really is a good sign for investment potential, because those are things that attract people. And obviously, when you attract more people, demand goes up, and we all know what happens. The price goes up as well. However, if you're looking for, so that's more so a long-term play. If you're looking for something a bit shorter, there are pre-sales not in master plan communities where we are still seeing opportunities. However, like I mentioned before, there's fewer and fewer opportunities the closer we get to those interest rate drops, right? For the reasons that I mentioned too. So if you're looking for an investment opportunity in that space, it's even more important this year to work with a professional that knows what they're doing and actually has a pretty high perspective on pre-sales overall. Otherwise, you might end up not being able to complete, or if you can complete, you might end up not being able to afford the payments, right? So that's one section where we see is quite feasible, but something that's even more lucrative, I think you can agree, Chris, is assignments in 2024.
100%.
So not just any assignment, right? So the folks that purchased pre-sale properties in 2021, 2022, more so wood frame pre-sales, those are going to be completing in about 2024, 2025. 2025, 2026. So that being the case, a lot of those folks that can't complete, they're assigning their properties for one of two reasons. Again, either they can't qualify because they didn't have a plan to begin with. They didn't foresee interest rates going up this high. So when interest rates go up this high, it's even more difficult to qualify. Another reason why they would be assigning their unit is because maybe they can complete, but they just don't have the budget, flexibility in their budget to make those higher payments that they didn't account for, right? So one downfall of not having a plan to begin with, even years before it completes, is being in this exact same position. The great thing, at least for the investors that do have a plan, is they can capitalize on opportunities like this. So not a lot, but I would say a decent amount of assignments that we're seeing, they're actually selling for less than what they purchased for. So if you think about it, if you can pick up one of those investment properties, one of those assignments for lower than 2021, 2022 prices, and it's even closer to completion than the beginning, what you're essentially doing is your capital is locked up for less time, but you're still taking the full benefit of the entire appreciation during the entire duration of the construction, which is great because whenever you invest, you always want to think about the opportunity cost, right? And one of the biggest opportunity costs for investing in real estate, specifically because your capital is locked up, is the time, right? In this case, the time that your capital is locked up, yes, it'll still be locked up for about a year or two, but that is kind of hedged with the fact that you're already getting the appreciation for the 1 or 2 years that it has been getting constructed, right? So personally, I think those two instances are great investments in 2024. What investment opportunities do you see in the coming year, Chris?
So I just want to backtrack a little bit for the folks at home. An assignment is essentially when you're purchasing a contract from someone else. So you are actually working with the old buyer to convince the developer to sell the contract to you. for the people at home, once again, it is a lot more capital intensive because you don't really have the time to spread out all those payments from, because you would with a regular pre-sale. With an assignment, you're essentially putting that whole lump sum down all at once. But exactly like Rodby was saying, with that comes fantastic opportunities, because sometimes when you do see a market shift the way that it has within the last couple of years, because of everything that's gone on within the world, markets can change very quickly, and because of that, you can pick up very good units at discounted prices. And the best thing about this is if you were to pick up a unit with a discounted price and the original buyer got some kind of discount or some kind of credit, that credit actually applies to you, the person buying the assignment as well.
Exactly.
So that's an additional benefit. But we won't go too deep into this topic because assignments are a completely new episode on its own, honestly.
Pretty complex.
So in terms of where I see some good opportunities within 2024, Rodby, I do 100% agree with you that pre-sales and assignments are the way to go. I think that, because of lower capital lockup, because of the fact that you do not need to find tenants and whatnot right now, it would work for a lot of people. But for individuals that maybe already have a lot of equity in their home, or they're in a position where they're upsizing, I actually believe that the Fraser Valley, in terms of both townhomes and detached on the resale market, which are homes that are already built, I think that's a fantastic opportunity. So what happened during COVID is, it's not a surprise that the real estate market was absolutely insane during COVID. So when the prices kept climbing with all these bidding wars, everyone actually moved further and further out. It went from people thinking that moving to Coquitlam was completely acceptable because it's like, I can't buy in Vancouver, so I have to go out to Coquitlam at this point. And then it became Surrey, and then it became Langley, and then Abbotsford and Chilliwack, and so on and so forth. So people kept moving out. And what happens when a market contracts and a market starts slowing down is a lot of these people that bought all the way out here, they're like, oh, work from home isn't forever. I'm actually going to sell my home. I'm going to bring it back. And all those people are actually starting to sell, and they're starting to move back into the mainland because Vancouver prices have softened a bit too. So they are, they're kind of taking advantage of that situation and going into it. But I believe the Fraser Valley is a fantastic opportunity because we have actually seen prices decline in some areas and in some types of inventory between 20 to 30% within the last year, a year and a half. So you're actually buying at maybe 2021, early 2022 pricing, or honestly, maybe even cheaper than that with no competition. Though we are starting to see the market heat up a little bit, starting from December. It's January right now. It's honestly pretty hot for like early of the year kind of thing, especially
More
right after
activity
New Year's.
than usual.
A ton of activity right now. But saying that, there are a lot more listings within the Fraser Valley than in Vancouver, Richmond, Burnaby, Coquitlam, stuff like that. I believe that if you're looking at the fundamentals of real estate and you're actually looking at infrastructure, you really can't beat the Fraser Valley. So if you're looking at the Surrey to Langley SkyTrain, they're saying that's supposed to complete maybe within a decade. I highly, highly doubt it. Because of how many stations they're really putting in.
It's true.
But that's one huge thing, and that's one massive reason a lot of people bought out in Langley. The Pattullo Bridge, initially it was supposed to be an expansion, but they actually did a one car to one car replacement, basically, where they took away 4 lanes and they put in 4 lanes once again. But the way that bridge is actually structured is that if you were to take out the pedestrian and bike crossing within the bridge, within the new bridge,
right,
you could actually potentially expand it to 6 lanes. And I believe that the government knows that this will need to be reality later on as more and more people move out.
Eventually.
It just makes sense because affordability is a real issue.
It is.
And you can actually get, I don't want to say it's cheap out there, but at least it's more affordable for a working class professional family
compared to
Vancouver proper, where you can find townhomes in the $2 million range. So in terms of the townhomes, just to give kind of a comparison, the Fraser Valley, Surrey, I'll give as an example because that's one of the hottest markets over there. You can probably get a townhome between $400 to $600 a square foot. 600 is very, very high already, and this would be brand new inventory, or at least 1 or 2 years kind of thing. So let's say $500 a square foot. But if you look anywhere in Burnaby, anywhere in Vancouver, for anything that's on the newer end, it's over $1,000 a square foot.
Sure, easily.
And if you can find 900, it'll be like 991.
Yeah.
I think there's literally one listing on the market right now that's 991 a square foot. So $1,000 a square foot. So it's double it's double the cost per square foot. So personally, with the high amount of immigration that we have, with all the people moving, with the people slowly building equity within their homes as well, I just do not really foresee how the Fraser Valley market can't really explode. I don't think it'll 2x or 3x or 4x or anything like that, but in terms of potential, growth potential, I don't really foresee why it wouldn't grow, especially if you're literally talking about half, dollar per square foot. The detached market is exactly the same way as well, where if you look at Abbotsford, for example, you can get a detached home there. There are some even listed at $950.
Yeah.
You list a home for $950 in Vancouver proper, it's gone in literally 4 hours. There's actually people like fighting in the streets, like fist fighting in the streets for this home. But in the listing that I saw yesterday on the market, I believe it was on the market for 100 days.
Wow.
No activity.
Long, hey?
I believe they're willing to negotiate on that 950 as well. So of course it's significantly further, but for someone that maybe works at home or a lot of the family is already in the valley, it makes a lot of sense. And this isn't a small home either. It's an older home, large lot, decent sized home. But so I just don't really foresee how, even as an investor, you wouldn't think that prices would go up in those areas.
Yeah.
And you and I were having a conversation about this before as well, where if you were to buy a home like that, and if you were to, let's say, parse it out room by room, or even rent it out, like if the house is 2 suites, like up, down, and then another suite, you would probably cash flow on the home as well, which is, once again, like something that you really do not see within the Vancouver market.
It's very difficult to cash flow.
Extremely difficult. At this point, for Rodby and I'm sure he would agree with this as well, if we do have a client looking for cash flow in the Vancouver market, we tell them to run. It's just not something that you'll ever really find. And if you for some reason find a property that does cash flow at 10 to 20% down, it's probably not the best one.
Yeah.
It's something that's probably very old. It might be leasehold. It's probably leasehold, actually, shared laundry. 40, 50 years old kind of thing. So your capital expenditures will be significantly more in the long run than the $200 per month that you're collecting in positive cash flow.
Exactly. It's really not worth it if you're really breaking down the numbers.
Not at all.
And to your point, Chris, I do agree. In the Fraser Valley, I don't see it not exploding, like you said. I mean, we've seen how the market was during COVID. Not to say that it's going to happen again if rates drop, but at least the direction it went during that time, where in the Fraser Valley, the further, I think you mentioned this to me, and I noticed this as well for myself, the further you are from Vancouver proper, the more sensitive the market is for interest rates.
Up and down swings.
Down swings. Because just like how recently we experienced a lot of interest rate hikes, the Fraser Valley dropped quite significantly. However, during COVID, when interest rates were pretty much non-existent, they increased more significantly than in Burnaby or Vancouver proper.
If you look further out in Chilliwack, I saw some areas where it was almost literally 100% increase within a year. So that is insanity. Obviously, it came down almost that amount as well. But exactly to Rodby's point, the ups and down swings, they're extremely sensitive to.
Which can be good and bad depending on when you get in and out, right? Thanks for sharing your thoughts, Chris. There were a few other, I guess, somewhat feasible investment opportunities that we were discussing before too. Can you shed some light on
Yeah, for
that?
sure. So, the two hot topics within our industry right now is one multiplex
Hmm.
and one transit-oriented development. Do you want to maybe shed some light on multiplex?
Sure. So for multiplexes, for those that are not familiar, essentially right now in Vancouver, but for the entire province, maybe even the nation, there's a lot of controversy around those residential areas that have only detached homes. Here in Vancouver, we see a lot of that. In East Vancouver, for example, a lot of the homes there are detached homes. However, we are quote unquote in a housing shortage, right? So it doesn't make sense for them just to be zoned as detached properties. What would make more sense if we could rezone that for multiplexes, which is a number of units, housing units within one parcel of land. And right now they're undergoing a change where, well, they've already approved it actually, where they would like to basically give the owner the ability to upzone to be able to do that. That's basically the gist of it. We'll get into the details in future episodes, but that may be a feasible investment in 2024. What about the transit-oriented developments, Chris?
Yeah, so just like with the multiplexes as well, the government knows that we are in a massive housing crisis. In BC and across Canada as well, and really globally. So in terms of transit-oriented developments, it's a very new thing. I think something that popped up probably a few months ago. And the government, or really BC, they've identified probably about 100 to 110 zones, like literally around the SkyTrain hubs, where basically the gist of this whole thing is if you are anywhere between 200 to 800 meters away from that SkyTrain, there are certain height restrictions, or really now lack thereof of height restrictions of like how far you can build. Before it was, in, let's say, by the Fleetwood SkyTrain. We have a friend who is a developer, and he was actually blocked from really building more than 5 stories from the Fleetwood development. But now with these new zones, he might actually be able to go up to maybe even 20 stories, which completely changes the entire real estate landscape, as well as add a significant amount of housing stock, which ideally would bring prices down or at least stabilize prices, if they can really fix the immigration issue as well. So that's TODs are really another topic on its own.
Massive.
Just like with multiplex.
Massive.
And these two are topics that Rodby and I are both looking into heavily as well. We do not know how feasible this really will be at the end of the day. Probably TODs will be a lot more feasible than multiplex. But we're really just waiting for, the city as well as BC to let everyone know what they're actually deciding to do.
Yeah, the difficulty with these new policies that are getting put in place is that there's not much information that's published about them right now, right? And even when they are published, they always say the devil's in the details, right? So without getting into it too much, those are potential investment opportunities in 2024 or maybe even further out, depending on how things goes. But we'll save that for another episode.
And that wraps up this episode. Thanks so much for listening. If you like the episode, leave a review and follow our socials linked in the episode description. Make sure you share this episode with someone you think would get value from this podcast. We'll see you next time.